Good day, investors. IonQ just released its Q1 earnings, and this was another massive quarter for the company. Revenue surged 755% year over year, management raised full-year guidance again, and the company continues positioning itself as one of the biggest long-term plays in quantum computing. But what really stands out here is that IonQ is no longer just talking about future potential. The company is now building real commercial partnerships, government contracts, and full-stack quantum infrastructure. So in this video, we'll look at the recent earnings numbers and fundamentals. Then we'll look at the major growth drivers behind the company, as well as the valuation after the stock's huge move higher. And finally, I'll give you my personal take on whether IonQ stock looks like a good investment opportunity right now after the earnings. But before we get into it, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. Thank you very much. So let's start with the earnings results because this was a very strong quarter for IonQ. The company generated $64.7 million in Q1 revenue, which was up an incredible 755% year over year. And as you can see on this slide, management also raised full-year 2026 revenue guidance. Previously, the company expected between $225 million and $245 million in revenue for the year. But now, IonQ is expecting between $260 million and $270 million, which is a very significant increase in guidance. At the same time, management also stated the company is on track to grow organic revenue by more than 100% during 2026, supported by strong backlog growth and a growing pipeline of opportunities. So overall, this quarter clearly showed that commercial demand for IonQ's quantum platform continues accelerating very quickly. Now when we look at the revenue growth trend, we can see this was IonQ's third consecutive quarter of record-setting revenue growth. Revenue increased from about $39.9 million in Q3 of last year to $61.9 million in Q4, and now reached $64.7 million here in Q1. At the same time, the year-over-year growth rate accelerated from 222% to 429%, and now all the way to 755%. Management said the growth was mainly driven by accelerating global system sales, increasing cloud utilization, and expansion of the company's full-stack quantum platform. So overall, demand momentum for IonQ's technology still appears very strong right now. And IonQ expects to maintain very high growth even as the company continues scaling rapidly. Back in 2021, the company generated only around $2 million in revenue, and now management expects roughly $260 million in revenue for this year, which is a massive increase in just a few years. IonQ also highlighted revenue growth of around a 150% compound annual growth rate, showing just how quickly the business has been scaling recently. Now, besides the strong revenue growth, IonQ also reported several operational metrics that point to a strengthening business overall. As you can see here, around 35% of revenue now comes from international markets, which shows that demand for the company's technology is becoming increasingly global. At the same time, approximately 60% of revenue came from commercial customers, showing that IonQ is continuing to expand beyond government and research-related contracts. Another important point here, around 35% of revenue came from multi-product sales, which supports management's strategy of building a broader, full-stack quantum platform business. And probably the most impressive metric on this slide was the 554% year-over-year growth in RPOs, which essentially represents contracted future revenue and backlog growth. So we can see that the operational momentum for IonQ still appears very strong right now. So after looking at the earnings figures, it's also important to understand what's actually driving the revenue growth for the company. And one of the biggest things supporting the long-term opportunity for IonQ is that quantum computing adoption is starting to expand across multiple industries. As you can see here, IonQ highlighted opportunities across life sciences, energy, logistics, finance, and cybersecurity, including applications like drug discovery, energy optimization, route planning, portfolio optimization, and quantum-resistant cybersecurity. At the same time, management also highlighted that the global quantum computing market could eventually create between roughly $1 trillion and $3 trillion in economic value by 2035. While industry revenue is expected to grow to around $3 billion to $4 billion by 2028. And governments globally have already announced approximately $55 billion in public quantum funding. So overall, the long-term opportunity for quantum computing still appears extremely large, especially as commercial adoption continues accelerating. And when we look at IonQ's market positioning, as you can see here, IonQ now operates across quantum computing, networking, cybersecurity, sensing, and even space-based quantum infrastructure. On the computing side, the company highlighted its 100-qubit fifth-generation system already in the market, with a 256-qubit sixth-generation machine expected next year. But beyond computing, IonQ is also building quantum networking technology designed to eventually help create a quantum internet, along with cybersecurity solutions focused on the growing demand for post-quantum encryption. The company is also expanding into quantum sensing, including atomic clocks and navigation technologies with potential defense and industrial applications. And furthermore, IonQ also continues laying out a very aggressive long-term technology roadmap for scaling quantum computing systems. As you can see here, management expects the company's systems to scale from roughly 64 to over 100 physical qubits during 2025 to potentially millions of physical qubits by 2030. At the same time, the company is also targeting major improvements in logical qubits and lower error rates over time, which are both critical for building commercially useful quantum systems at scale. And one more important thing to note here is that IonQ believes its technology offers one of the best economic and deployment advantages in the quantum computing industry, which could further strengthen the company's long-term competitive position. As you can see here, IonQ estimates that the cost per system for its approach could be dramatically lower than certain competing superconducting systems, with estimated system costs below roughly $30 million, compared to more than $1 billion for some alternative approaches. At the same time, IonQ's systems are designed to operate with far lower power requirements and standard data center infrastructure, rather than requiring massive specialized cooling systems and extremely large facilities. So overall, its trapped ion architecture could eventually provide major advantages in cost, scalability, and commercial deployment. So after looking at the fundamentals and growth drivers, let's now take a look at the analyst expectations and valuation outlook for IonQ stock. According to stock analysis data, analysts currently have a consensus strong buy rating on the stock, with an average price target of around $66 per share, which implies potential upside of roughly 27% from current levels. At the same time, analyst price targets vary quite significantly, with the low target sitting around $35 and the high target reaching approximately $100 per share, indicating potential upside of roughly 90% on the high end from current levels. So overall, analysts still appear very bullish on IonQ's long-term growth potential after the earnings report. And when we look at the stock performance, we can get a better view of the current setup for IonQ shares. As you can see here, the stock is currently trading around $52 per share, giving the company a market capitalization of roughly $19 billion. At the same time, the stock has been extremely volatile over the past year, reaching highs above $80 per share before pulling back significantly. The stock also does not currently have a PE ratio, meaning the company is still in the early stages of scaling and is not profitable yet. As IonQ continues investing heavily into technology development and long-term growth. So when we bring everything together, IonQ is growing extremely fast. The company just delivered explosive revenue growth, raised guidance again, and continues expanding across quantum computing, networking, cybersecurity, and sensing. At the same time, IonQ is still not profitable and continues spending heavily on R&D as it scales its long-term quantum roadmap. So the valuation here now largely depends on whether quantum computing can eventually scale into a real large commercial market. But in my opinion, IonQ still looks like one of the leading companies in the quantum computing industry right now. The company has strong technology, a rapidly growing commercial platform, and significant long-term market opportunities if adoption continues accelerating over the next decade. Of course, this remains a very speculative and high-risk investment, but if quantum computing eventually reaches large-scale commercial adoption, IonQ could potentially become one of the biggest long-term winners in the industry. If you found this video helpful, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching, and happy investing.